Where we stand, where we fall, history don't care at all. Make the bed, like the light, lady must be what we call tonight. You don't waste no time at all. Don't kneel down, but you answer the call. Come to you as to us all. And it's time for the heaven call. Every night, every day, a little piece of you is falling away. Lift your eyes, the West remains. Good morning, everybody. Happy Thursday. It's January 26th, 2023. Great to be with all of you today. A little bit early on the morning bites here. We have a couple of economic reports coming out this morning. GDP first look for fourth quarter comes out at 8:30. Also, we'll get a quarter read on personal consumption expenditures. We'll get durable goods, jobless claims, and Chicago Fed national activity. And then tomorrow we'll have another set of data here. Mostly the important one is going to be the month-over-month PCE, or personal consumption expenditures, from December to January. So these are definitely interesting numbers that the Fed is going to be paying attention to. There's a range on the GDP that many are looking for, anywhere from about 2.6%. You can see that right here. I'll show it to you right now. Right here, GDP 2.6%. The price index a little bit more, a little bit too high, but less than the last quarter, 3.3%. Looking on the price index, that'll be coming out in about 8-9 minutes. And again, durable goods, 2.5%. You know, back in the day, durable goods was mostly based around Boeing's orders around each month or each quarter. So there was a large bulk data point in that release in durable goods. But these days, not so much all about Boeing, but still they are a big presence in that number. So let's talk about the markets for a little bit. So as you can see here, the S&P 500 is up a bit. The ES futures are up about 18 handles, 98 on the NASDAQ. We do see volatility trying to creep up a little bit over here. I think the markets are mostly in a holding pattern until next week. What is next week? Next week is the next Fed meeting. We can take a look at Fed funds futures here and see where the market is anticipating the Fed's next move is going to be in the next couple moves. You can see that right here. There's actually a 99% chance of a 25 basis point rate cut. There's a 1% chance that they do nothing. So obviously it's leaning towards the dovish side of a little bit. But then you look into March, and you can see there's an 84% chance, 85% chance of another 25 basis point rate hike, and there's a 15% chance of nothing happening. But then you skip May and go out to June. And you can see here that the fight here is that by June we're between 4.75 to 5%. And so from what I'm estimating here, a 25 basis point rate hike next week, another rate hike in March, maybe a skip in May, and then a pop in another one pop in June, and that would probably be enough, because you go out to the rest of the year meetings, and it's all hovering between 4.75 and 5%. So that's what it's what the market is looking at, and the Fed pays attention to what the market is saying. However, they are also paying. They have one eye on the markets. They have one eye on the data. So the data is, if it continues to remain elevated, I will tell you that looking at the Cleveland Fed now casting inflation number. Let's look at that right now. They're looking for a hot inflation number in January. We have seen a lot of taking sweet time coming up here. We have seen a lot of commodities starting to lift once again, like they did in 2022. Here's the month over month, 0.58, looking for a January increase in CPI. Core CPI at 4.6. That's elevated. That's more than 5.4% on the core. On the CPI headline number, that's almost it's over 7% annualized. If you take 0.58, multiply it times 12, you come to about 7%. So that's quite a bit too hot for the Fed. Of course, considering last month we came in at 0.1 or roughly 0, and we never really rallied off of that. So when will all of these increases in commodity prices start reflecting themselves, perhaps in the CPI? Maybe by April or May. It's a pretty good strong lag period that the data has with the increases and decreases, and we've seen certainly we saw prices starting to come down in the fall of 2022, but they didn't start reflecting themselves into the CPI or the PPI number for another couple months later. So the Fed is going to need to see some really strong drops in inflation. This is not going in the right direction here. Okay, so why isn't, so you might ask yourself, well if the Fed is going to raise rates more, Bob, why aren't the markets reacting and saying and being scared of it? Well, because we're probably closer to the end of the rate hike cycle than we are to the beginning. I'm saying rate hike cycle, but the Fed is probably likely to keep rates, and they've talked about it, higher for longer and probably into 2024. So they basically raised the cost of doing business for everybody by raising interest rates, and they're going to do it for a long period of time, keeping rates high. So that's going to keep a lid on earnings. So far, we've seen fairly good earnings and revenue beats. I think it's up to about 57 to 58% of the companies so far this earnings season. And we do have a big tech week of earnings next week. And then finally, I want to show you the S&P 500 chart. And you can see here, it's made a move above this 200-day moving average again. It's stayed above there for 4 straight days now. It looked like yesterday we were gonna tumble, but I want you to take a look at this chart here with me. This is the ES futures on the top. I look at this every day, and the volatility futures on the bottom. Now, I want to show you what happened here yesterday. Okay, yesterday, of course, we sold off at the beginning of the day, and we see volatility started to rise sharply. We saw a lot of volume coming in, and then all of a sudden, it died out, and then we saw volatility starting to decline here. So this is what we have right now in the marketplace. We have and this is towards the end of the day. So volatility came down, and the S&P futures rallied. So here's the matching up, right? So we saw the markets rally up over here towards the end of the day to get to nearly the flat line. But here's what we have going on right now. We have people who are not fearing that the markets are going to go down. All right. That's how I interpret this. We see volatility coming up and people saying, oh, let's sell that volatility. Let's sell the VIX. Let's sell volatility and in kind buy the futures, right? So if you sell volatility, you're not worried that this is going to turn right back up in your face. And if you buy the futures, that's just the matching trade to selling volatility. If you sell volatility, then you feel pretty secure and pretty confident that the markets are not going to go down. So if that's the case, then buy the futures. But at some point in time, that mixture is not going to work, right? I'm not predicting it. I'm not saying that okay, it's going to be tomorrow, it's going to next week or next month, whatever. It is what it is right now. This is the trade that's happening, and people are confident, comfortable getting into it. But it is not a trade that's going to last for much longer. So you know what? If you're not comfortable doing that and basically throwing your hat in the ring and saying, okay, this is the point where I need to sell volatility, step aside. It's okay. Or play both sides of the market. You could have some puts on, have some calls on. That's what we do in the chat room every single day. So it's going to be a dogfight here today, tomorrow, and into next week. The Fed meeting is on Tuesday, Wednesday, I believe, and next week or Thursday. Wednesday is a decision, and markets are going to adjust to that. So I think on this GDP number coming out keep an eye on the euro dollar futures /GE on the Thinkorswim platform as well too. So I'm going to wrap it up over here. We have again, we have another couple of data points coming in. Have a great day, everyone. I won't be here next Monday. I'm be on vacation for a few days, but I should be back on Thursday, February 2nd, and spend another day of daily bites with you. Thanks all, and have a great trading day.